Hello, Warriors. How's everyone doing on this wacky Wednesday? Who likes trading on wacky Wednesday? So in honor of that, we have Greg Horvat with us. In a little bit, Greg is going to be here. Don't miss it. Hang around. The interview later is with Alex at DAX Extra. So he probably will have some looks on DAX. I just want to talk about a couple of things here. If you've noticed, crude really bottomed Monday. So the S&Ps have made successive new lows since Monday, right? This was Monday. Okay, so we've made new lows there. Crude seems to be resisting that decline. It seems like it's possible. I know Grega was looking for a low in here, right, buddy? And right around, between here, 59-ish, 80, something like that. So to me, it still looks like there's potential of a little triangle. My dream area to get short would be back against this wedge line up here. Just enough to take out the buy stops of all the bears and then head down in what Grega would call maybe a C, or the bears would call a 3, and I'm sure you'll get the correct count from him when he's here. And then a couple of other things I want to touch on. If you were here for the David Brady interview last week, which Steve Volge is a very big fan of, when David was here, he said his signal for getting short S&Ps was 2860. Check this out. Look at that. The low was 2860.60, right at the 50-day moving average. So we'll see if David Brady's sell gets tripped this week. The bulls are going to say there's still a chance for another rally back above 2960. I would say that's going to look less viable if we take out that number. Everyone with me? Oh, Gary Kitson enjoyed the David Brady. I'll let Steve go over the welcome, Miguel and Rio. Steve will probably go over yen crosses, or else it'll be, we could always ask Grega. Okay. And one final thing I want to talk about is the gap in yen. Okay. Pretty rare that you get gaps, in FX. Mainly they only happen over the weekend because of the nature of the business being 24/6. And was talking about selling a rally into the gap, and we're at new lows. It looks like drive 2 here. Maybe you're going to get a bounce. This low is not confirming. But just my view on yen, I think eventually it's going to be a great buy. But we have to wait for this. Here's your 10-year yield. And we're not that far away. So let's look at the daily. So this was a little 1, 2, 3 here for this rally. Talked about 260, 265. And here we are, either going to post a higher low for another bounce, but I don't think we're complete until what happens. Anyone who knows my work, what's missing or incomplete on this yield chart? Anyone know? I bet Ziggy knows. I know Amanda knows. Any guesses? 1, 2, 3. Oh, that was a clue. Yeah, they've got it. Confirmation. No, I'd be looking for divergences down here. But yeah, Mark has it. Mark Pompeo. You're new here, Paulo? Well, you have a guardian angel that led you here. Okay, so take the trial and check it out. Faces the tip of the iceberg. So I'm looking for one more low here, and expect here's TLT, just so you have a look at the proxy that I use right here. So it's the inverse picture. Here's 1, here's 2. So, you know, I don't think in time we're that far away, and I'm not sure about a final price, but I'm looking for it to take out this high. We'll see what kind of, if we could diverge here at new highs, and be interesting to hear what Greg thinks about the bonds and rates and everything. So this is something I'm preparing for. So I start to look for things before they happen. So I'm prepared mentally, psychologically to execute rather than analyze once it happens. And just wanted to tip everyone off. I think the DSI is around 70 or so. I looked at it yesterday. It was, you know, in the 80s up here, but it's still, you know, this pullback in here took some of the bullishness out of the market, but it's picking back up again. At new highs, you should have DSI readings in the mid 80s coming up here. And I think that's going to be a fairly significant high. Here's a weekly. Okay, so maybe it's up here against this resistance. Maybe there are fib levels up here, but it's very possible that this is an important high. I know my buddy Jim Walsh is looking for yields to return back to where they were last year, back towards 3.25, and that the markets won't like that because that'll compress earnings. So how's your internet today, Blake? Up and running?
Hey, Coach. Sorry about that. I'm
all right,
just
bro.
in the middle of I was trying to send out a chart.
Okay.
Really quick. Give me 2 minutes.
Go ahead. Yeah, go ahead. I could talk about something else. So, guys, you know, you may want to consider some bearish ETFs if we take out that 2860 level. They're all real cheap. I've been underwater on this one for a while. Looks like it's starting to turn, starting to have some divergence down here. That's just one of them. Here's the SPX. I think this is 2 times. Pretty good divergence in here. You know, even if it's just a correction, you know, that's 20% back to that line. So there's some bearish ETFs to take a look at. NASDAQ, you have the quid coming up here. The quid is 2 times. Okay, so again, divergence on the daily. Divergence on the 4. And pretty massive divergence here. So it's trying to come out of here. So keep an eye on some bearish ETFs. I know for me, trading S&P is a little bit too wild, even though they have a mini S&P. ARP doesn't allow me to trade S&P futures. Okay. Blaker, we're the mafia. We're the FX mafia, Nitish. And you're part of it. You're the muscle. All right, so dollar to, you know,
Okay.
Oh, you ready, bro? Okay.
Yeah, sorry about that. I was just sending out a chart via ForexAnalytix.
Oh, and I'm sorry I missed Marijuana Monday a few days ago. Here's all the marijuana stocks that Blake is trading.
Yeah,
right
all right. They're down pretty big, huh? They had a big down day yesterday for the most part.
Yeah, I heard that everyone's bong is because of the allergy season is kind of clogged up, so their bongs are clogged and they can't, you know, no demand right now. It's a demand market.
Oh, got it. Yeah, cannabis, man, I'll tell you. Anyway, it's been kind of a busy day. Let me go ahead and take over here. So I took a loss overnight, and I had a cable long. It was a really small pound long from Friday. I had it long as we went above 131, and I took it long, and we ended up the week really strong, and I'm like, okay, well, let me just kind of go with my thought process here. So I had a real small position, and I knew this was, and let me go over to the daily chart. I knew this was, as I picked up on Friday, I knew this was the 618. We were right here, right above the six, or right climbing into the 618. And I'm like, okay, if we break the 618 going into next week, I'm going to buy more. So then, Monday, closed lower. And again, this is small, and it's like break even on Monday. Yesterday, I was down a little bit, and then I put my stop below this trend line here at 50 and overnight. And, I'm like, okay, if it takes out 50 and I have my stop at like 47 or whatever, we take out this trend line, I'm going to get stopped out. It's breaking down, and it did. It broke through the stop, or broke through the trend line, tripped my stop, and I got out. And I was like, oh, that's a bummer. And then, but I had a bigger position short the dollar Swiss yesterday as we failed above 102, and I closed that at 71 this morning as I got up and realized I was stopped out of the cable, and I took my profits on the dollar Swiss short, and basically I'm break even. Like I'm looking at my P&L right now, and my P&L, I'm down $62, which is for me, it's very, it's
micro.
Oh man, because I can wake up, overnight and be down 10 grand or be up 10 grand. It's for my account to be down $62. It's like, well, that's just it was a break even for me because of my losses in the cable, and then my gains in a much bigger position on a short dollar Swiss. So now I'm just kind of trying to figure out what to do. And
what do you think? Another push higher here, Blake, to take out that high?
What for the Swiss?
Yeah.
I shorted it yesterday because of the failure above 102. I think I had I had the short going from 102.05, and so I don't know if we make one more high. I'm still looking at this 161% extension as being doable. That's where I'd like to actually be on the short side of the dollar Swiss ultimately. So
that would take all the buy stops out because you know where they're at. Everyone has their stops above the high.
Yeah, that to me would be optimal. I just don't know if we're going to get it. It's like, because the risk adverse nature of this market at the moment, it's really hard to say that that's what we're going to get. Now, speaking of that, we have the vice premier coming in for these trade talks. I think his name is Liu He
or something, whatever. Yeah,
I think, but he comes in tomorrow, right? That doesn't leave a lot of time to negotiate. That's the problem, Stelios. It doesn't leave a lot of time to negotiate. I mean, tariffs, according to Donald Trump, are going up Thursday night at midnight. So, how much time for negotiating does the two superpowers have? I mean, so if you wonder why stocks are so weak right now, it's because of that. Now, I'd like to think a little bit more positive. I actually bought the Aussie yen this morning. I picked it up about 5 pips ago. So you could obviously tell where my stops are at. My stops, I'm playing this from a false breakdown standpoint and hoping that we make a higher low, but my stops are below today's lows. So just so you guys know, if we hit 95 or get below 95, it will trip my stop. But I'm playing it as all right, let's hope that the US and China try to put something together. Let's hope the market actually tries to think a little bit more positively, and we can hold through this support. And this is a pretty important support for me. So you can see this previous resistance, current support, and let's also do something else here. This is the S&P, guys, if you're wondering what the hell I'm looking at the moment. So you can see this is a 38% retracement, and I'm gonna and we're holding it, kind of. You can see we're holding it. My 2 cents are is that if we break, and this is where this arrow comes in. If we break below 2860, we are going to come under some pressure. But I picked up some Aussie yen, hopes that we're going to hold this. And like I said, I'm not giving a whole lot. Now, when I mentioned that in the chat room, Chi, who's one of our traders in the chat room, you hear me mention his name every once in a while. He goes, my selection would be the New Zealand yen. And I actually tend to agree. And I wasn't even thinking about it when I bought the Aussie yen. It was, I picked up the Aussie yen more of the China proxy. But the New Zealand yen overnight, we got a cut from the RBNZ, but it was a hawkish cut. Meaning, and I was in the chat room when that all happened. I actually bought the New Zealand dollar. I think I shorted the Aussie New Zealand. And if you have ForexAnalytix, I mean, you got all these charts too. So if you go to here's an example of the Aussie New Zealand overnight Asian session update. The RBNZ cut rates. The Aussie New Zealand spiked towards trend highs, but since the cut was looked at as a hawkish cut, the Aussie New Zealand upside may be limited. Bulls need to be a little careful while near 107. So, as we spiked above 107, I sent out the warning, like, look, this, the RBNZ this looks like a one and done type of situation. That's what I was telling the guys in the chat room. You can't be bullish to Aussie New Zealand up here. And, Aussie New Zealand is down at, is at 106.25 basically. And the Kiwi really has, sustained better overnight. And so with that being said, is the New Zealand yen a better opportunity down here? It might be. We held the 618 retracement of this move. Now, the thing about the New Zealand, and you can look at the New Zealand yen and say, well, what about that big spike down here? The thing about the New Zealand yen is the New Zealand yen or the New Zealand dollar during January 2nd, the night of January 2nd, where we saw this massive spike, the New Zealand currencies and the New Zealand pairs, were really more of a, less flash crash than the Aussie was. The Aussie was very flash crashy, and the New Zealand dollar actually was more of a stable currency through that whole mess. So these numbers are I would say they're more valid than the Australian numbers. So what I'm trying to say is I'm respecting the 618 a little bit more than in the Aussie. And you can see the New Zealand yen, we came down to the 618. We are oversold here on the daily chart on relative strength. And frankly, if the New Zealand yen, closes the day at 72.80 or higher, that's going to elicit some sort of continued squeeze, I would think. Now, like I said, I picked up the Aussie yen, which was probably not the better choice. I probably should have been in the New Zealand yen. I should have thought more about that before I did, but you have to also keep in mind that I get up at 3 o'clock in the morning, and sometimes I'm a little fuzzy for the first couple hours. But I do think the New Zealand yen is not a bad choice in this situation. Also, considering the fact that the New Zealand dollar, spiked below these lows. And I should probably revisit this because we spiked below these lows. We got the breakdown, okay, but now we might have put in a false breakdown in the New Zealand dollar. And frankly, if we get above this trend line here that comes in at 66.20, which we're not too far away, we're only 30 pips away. If we get above that that trend line, we are going to start squeezing in the Kiwi. So that's something to take into account, as well. And if there's a China-U.S. trade deal, yeah, both the Aussie and the New Zealand would benefit from that. in my opinion. One of the other things that that I want to point out this morning is if you go back to the S&P, and this is one of the things that I'm referencing in my Aussie yen, and the reason why I'm picking up the Aussie yen is you see that these, this S&P move now, it doesn't mean we can't hit lows, but we're finding some support down here at that 38% retracement, and we're trying to make higher hourly lows, which is a risk if you're bearish. And that's one of the reasons why, again, I picked up the Aussie yen, is because I'm looking at the S&P going, okay, we're not making new lows anymore, at least on an intraday basis, and you might see a little bit of stability between now and Thursday night, which, obviously today is Wednesday, so you're talking the next 24 hours, we might get some stability. Does that mean the S&P is going to rally to new highs? No. I don't think it's going to rally to new highs unless we find out there is some sort of China-U.S. trade deal that happens between now and then, but that's not going to happen, I don't think. What may happen in the S&P is we get some sort of stabilization here, ahead of Thursday, and then or ahead of Friday, and then the market's going to make its decision what it's going to do Friday morning. And that's why I think that if you're talking today and tomorrow, you got to be a little bit cautious on being on the short side of risk. You got to be a little bit more careful. I think that the potential of a bounce in risk at this moment, unless we find out it's completely off, like let's say the vice premier turns around, packs his bags, and splits back to China, well, the deal's off. Then you short everything. I would think. You sell S&Ps, you buy yen, you buy dollars, buy buy and sell anything that you would think that would be prevalent in a risk-off environment, which in essence is buy dollars, buy yen, sell stocks, sell Aussies, sell Kiwis, that type of thing. But unless that happens, and if it doesn't happen, I mean, there's probably going to be a consolidation between now and Thursday night. So try not to get too bearish risk here, is what I'm trying to say. One of the other cues that you can take too is if you look at the dollar Canadian. The dollar Canadian is in a triangle. This is a pretty good proxy for risk, and always has been. Is the dollar Canadian. I think the dollar Canadian is in a triangle. So what do I mean by that? Well, we're probably in a consolidation here, right? This is probably going to continue to consolidate between now and Friday. We're probably going to do this, or Friday morning, Thursday night. We're probably going to do this, and you can see the dollar Canadian's coming off. That means volatility is probably coming down too. The dollar Canadian and volatility have a very strong correlation, meaning if volatility is going up, typically the dollar Canadian is going to go higher as well. So that is a good proxy at the moment to tell us that stocks are probably consolidating, or consolidating recent losses, as we're not seeing a breakout in the dollar Canadian. The flip side to that is if the dollar Canadian actually spiked higher and went through resistance here, then that would be telling me a different story. That would be telling me it's probably time to sell equities or sell risk as a result, but it's not. That's not what we're dealing with right now. We're dealing with a consolidation pattern in the Canadian. So anyway, just some food for thought there. And the dollar Mexican peso. This is another consolidation type of pattern where when volatility spikes up, the VIX was moving higher. I'm surprised the dollar Mexican peso didn't go higher as well. I'm surprised it didn't break out. I was talking to one of my colleagues yesterday, and he's like, "What do you think of the dollar Mexican peso?" He's like, I really want to be buying it as volatility's been going up, because typically you sell emerging market currencies when you see stocks moving lower like they have been. And I was like, I'm a little surprised the dollar Mexican peso has not moved out of this wedge yet. And because it hasn't moved out of this wedge, that, is telling me that, stocks are, probably not going to go in a free fall. If I saw the dollar Mexican peso, breaking 1920 to the upside, then I would know that it's time to really, sell risk. But we're not there, and you can see even this morning it's showing some failure up here at the wedge top. So the dollar Mexican peso again is another cue that I'll be queuing off, another clue that will lead me to understand what the hell is happening in risk. So, if you see a spike higher in the dollar Canadian, if you see a spike higher in the dollar Mexican peso, and they start breaking those resistance levels, then you know that stocks are probably really breaking down. It's not a oh, maybe we might be breaking down. No, if these are screaming, if you see the dollar Canadian really breaking out to the upside, you see the dollar Mexican peso breaking out to the upside, that is telling us that stocks are probably going to go into free fall. The flip side to that is if the dollar Mexican peso starts breaking lower and we break through this 1880, that tells us that S&P is probably going to all-time highs. So there's a couple ways to think about this, and I think that these are good currency pairs to be watching in this environment, because they should really be able to tell us the full story. So that's in essence what I'm looking for going into the next couple of days, that I think will really help us out, identifying which direction we're going. So so I heard Stelios's voice earlier. Good morning, Stelios. How you doing?
I'm very well. Good morning. I'm very good. There's been a few things happening overnight.
Yeah, well, wait. I was going to say, it looks like we don't have Steve here today, right?
We don't?
We do.
I guess Steve is here. Well, he is here. Oh, I knew Greg was coming in. I wasn't sure if Steve was going to be here, but good deal. Steve's here. But so what happened overnight? It looked like some things in the UK has fallen apart somewhat.
Well, after all this time after we got the extension, the Brexit extension a few weeks ago, it all went pretty calm. But now the Conservatives and Labour are trying to find out some kind of compromise so that they can work together, and it seems that it's not going well. So the market's now waking up and saying, damn, this if they don't find some kind of agreement, then it's going to be difficult going forward. And also, there's been really strong rumors about May stepping down. She kind of denied it today, stuck with the plan that if the agreement doesn't.
Would you think that's a positive for the cable? I think it would be. I think you might get an initial jolt lower, but I think it's a positive.
It's a good question. I said the same thing in the chat room. I said, if May goes, it's probably not a bad thing. But then, there's the other argument that who's going to replace her? You have people like Boris Johnson and, waiting, who are pretty hardcore Brexiteers. So it's difficult to gauge what the reaction is going to be if she goes. I personally thought that, how much worse can it get from May? But in terms of what May wants going forward, well, she wants the agreement. If somebody else comes in her place and is much more hardcore against any kind of agreement, that's going to be negative for the pound. So it's very difficult to gauge what's going to happen if or when she goes, but she seems to have 9 lives so far, and she's sticking. So that was interesting. Another piece of news that came out, which is interesting, and not too many people are talking about it, is Iran. There was an agreement in 2015 about their uranium enrichment program, and they're threatening to resume beyond what was agreed under this agreement if the country does not find a way to continue to sell oil as it used to. So they're saying, the Americans are trying to limit the oil that Iran can sell. Well, we can do this in return. So that's quite interesting as well. There's a lot of tension out there, in the world, and frankly, it's quite worrying what's happening. But
and that could produce, you know, a rally in crude oil, right?
it could do, yes,
Yeah,
could do.
so if you're watching crude here, I mean, you can see the risk is clearly, you know, after seeing a little bit of a pullback after this, you know, strong move, which you know, technically it looks like we're going to continue to pull back, but frankly, if we take out this little trend line here, we could be heading back up to this big resistance zone that we've been in. So interesting.
Yes,
all right, well,
and, okay. I mean, Steve is here, so he's probably going to take the screen. I have one more thing to say, which is the your daily dose of comedy, which is the Italian Deputy Prime Minister Di Maio said that it is possible that Italy will break the 3% budget deficit level. So remember, yeah. So remember, we're talking about this is going to be 2.4% or 2.04%. Well, I'll tell you what, it's probably going to be above 3%.
I don't believe it, Celio.
All right, guys. Well, hey, I want to wish everybody a good trading session today. I know Greg is coming in, so I'm gonna bow out. And we love having Greg here. His Elliott wave practice is like second to none. So for those of you that are listening in, you guys are in for a true treat. But make sure you you know, to get this treat for free every day when coming through here, make sure you visit our sponsors, Forest Park FX. Steve's a loyal and faithful client, and so you guys should be too. So
very true, and they can answer regardless of if you want to use them or not. They can answer any questions you have about brokers and guide you to make the best decision. So thank you very much, Blake. As you very well said,
guys.
You too, mate. As you said, Greg is going to be with us, you know, in a minute now, but you know, that doesn't stop us from having a look at a few charts until he's here with us. So let me go ahead straight to questions. Let me see. Okay, pay the mafia to restore. Blaker paid the mafia to restore his internet, says Nidis. Okay. Do you think if they decide not to raise tariffs, the market will turn and go back up? Yes. The initial reaction to such an announcement is definitely going to be positive. Definitely. I mean, I can see no real scenario that they can walk back on increasing the tariffs and the market not rallying. And, you know, it's one of the few times that the market would make sense from a fundamental perspective as well. I want to remind you that oppositely to what Trump says and, you know, wants people to believe, the tariffs are not being paid by Chinese. The tariffs are being paid by US citizens. Okay, it's an extra cost for the imported item paid by the consumer to the US government. So yes, that also hurts Chinese products in the sense that obviously, you know, demand and supply, the more the price of something goes up, the less demand for that. But, you know, sometimes there is no alternative. I mean, even if you
unless it's S&Ps.
Yeah, that's a good point, Coach. Anyhow, Greg is with us, and I don't know for how long he can be. So I'm going to be here, and we can answer questions once he's gone. Hey, Greg, what's up, mate?
Hey, hi, Greg.
Hey, how are you?
Good. How are you?
Good.
Buddy?
How have you been?
I'm fine. Just watching unbelievable, once again, Liverpool Barca highlights.
Yeah, that was simply. I didn't watch it, but the scoreline was just amazing. I mean, too bad I couldn't watch it.
As you know, I'm a soccer fan, so but who is not?
You mean a football fan? Thank you.
No, I think he was right.
We have a lot of people from US, so
yeah, very true.
Otherwise it would be
where they really play football, right, Greg?
Yeah.
That's not what he had in mind, but whatever.
Okay, so I want to bring attention to this chart. Okay, so we have the 10-year US notes versus the S&P 500. As you know, we have seen a very strong breakdown yesterday on the S&P, on the US stock market, but the 10-year US notes held this resistance very well. So I'm thinking that since we didn't see a push through on the 10-year US notes to the upside, I'm thinking that actually this is a bearish pattern which may send prices to the downside for 10 years. So eventually we will see a support here on the S&P 500. Okay, so if we look at the wave count here on the S&P, and maybe move this side. Okay, now you can see that I'm looking at a 5-wave decline and a counter trend rally here, ABC move with a nice resistance here around 61 up to 78.6%. Also, if we look at the daily here, okay, we completed a very nice clean 5 waves up. So obviously we should be in a 3-wave retracement minimum. Obviously, I'm looking for a reversal back to the area of a former wave 4, which is still below the recent swing low. So I'm thinking about the upcoming wave C. And if that's going to be the case, and if we consider that despite lower stocks, 10-year US notes did not move to the upside, especially not with the same with the same manner like yesterday, the stocks decline. So I'm thinking that actually stocks may find a support. Okay, so what I'm looking at the S&P 500 is very nice gap here that you have from April 1st. And as you know, once gaps are filled, it may provide a very nice reversal zone. Also, I'm looking here to be a wave 4, which can complete the correction at the area of a former wave 4. So this is again at this gap area. Also, we have several swing highs here in that zone back from late 2018. So this appears to be a very nice, interesting support area from where I would anticipate a bounce. Also, if we take a look on NASDAQ, okay, you can see a lot of overlapping price action here within this current decline, at least at this stage. So I'm thinking that this can be wave 4 of this lower degree or maybe of a higher degree if we will suddenly see this invalidation level broken. But I see this as definitely as a corrective price move at the moment. So I'm thinking that support may not be far away. Also, if we take a look at DAX, I posted this chart on DAX yesterday on Twitter, and you can see that in previous downtrend, DAX really loves to make a pullback from 600 to 650 points. In some cases, you will see a pullback of 500 points, okay? So if we respect, you can see that in downtrend, always when market bounced with such points, with such range, market then continued to the downside. So upside was limited. Now we are on trading in uptrend. Obviously, we have seen again another pullbacks with 500 to 550 points. Maybe we'll see a new one with a 600 points pullback. So so far we already made 400 points pullback. There is a very interesting trendline support, and the previous here.
I was showing that yesterday. 11,800 is a super key level. So
yes,
if we find support there, yeah, it's going to be a great buy zone. That's very true.
Only that, you have this gap here.
Yeah. Confluence of supports there in general.
Yes. So
many supports.
So if we try to put into
was that gap on the same day the S&P left the gap, Greg? The gap that you're showing, it probably was. The DAX and the S&P's gapped up. I wonder what the event was at Monday when it came in like that. Higher.
Yeah. It was, I'm not sure what was it.
Someday.
So,
thank you.
I mean, so if we're trying to put everything into the same context, I mean, 10-year US notes from an Elliott wave perspective, I think that there's more downside. We have seen a breakdown of the S&P 500, but the 10-year US notes didn't rally. We have a move lower showing on stocks, corrective personality, and we have this DAX that is making a very nice pullback based on the previous reading. So I'm thinking that maybe this is just another temporary pullback and that we will see a new rise. Also, if we take a look on dollar yen or Nikkei, firstly, Nikkei made a 5 waves up. Now it's making a 3-wave retracement. Okay, it can also see a support here if you draw the previous swing low here from 2018. This could be a very nice area. Definitely, it was very important already here, this wave 4. So once again, this level can be tested and then send prices to the upside. And everything in this situation, of course, would be supportive for dollar yen, in my opinion. Maybe not for dollar in general, but definitely for dollar yen, I think. So what I see here is potential flat correction in the making. Firstly, I thought that wave B finish was finished here and that we are already in a third wave, wave C of the moving higher. But because current decline looks very sharp, I'm thinking that this is impulsive decline. So I'm looking here to be 5-wave structure still ongoing within wave C. So once we will complete this pullback in 5 waves, probably somewhere below this wave A swing level, that's when I would be looking for a bounce here. And if stocks will also recover at the time, I think that this could be very interesting.
Another gap for you left Monday.
Yes, exactly. And also, I'm not sure if this gap was filled.
It wasn't.
It was.
Ate into it, but did not fill it.
Okay, so that's another very interesting conversation that suggests that we will see actually maybe a reversal back to this gap sooner or later. Yeah. And if we take a look at some crosses, crosses like
great stuff as usual, Grega. Great stuff.
Thank you.
We're so fortunate to have you as part of the team, so I'm going to waive that fee. Okay.
Okay.
All right, buddy.
So what we have here, Aussie yen, also very important spike here at the start of the year, recovery. Now we are making a pullback. Looks like this can be ABC flat. Okay, so I'm expecting a bounce here. Also, what we have here is CAD yen pulling back in 3 waves. Also, supports may not be far away, and gap is definitely still open up there. So again, another indication that stocks could, if stocks will bounce, if really the support will be found, then definitely in FX place you want to look at these pairs. Also, let's take a look on Aussie dollar. Now, Aussie dollar technically here moving or making this pullback in very slow overlapping price action. I think the 61.8% to 50 is currently very important. On the 4-hour chart, I'm looking here to be wave C. Maybe we get another test of this lower parallel trendline support and then a bounce. Also, what I like is that dollar versus Chinese yuan here. Okay. You can see that on dollar versus Chinese yuan, we have seen a 5-wave fall and now making a 3-wave pullback. Okay, so I'm thinking that this is a corrective recovery and that we will see wave C move to the downside. So if this correlation with Aussie dollar will stay intact, then obviously Aussie dollar, which is in blue, should recover. Okay, and this makes me even more confident about the Aussie dollar wave count that we are probably making just a corrective pullback. So I will definitely be watching this one very closely once we will approach the 61.8% level. Also, gold is gold can maybe stay sideways now after it moved very nicely to the downside. It was a very clear pattern 1 month or 2 months back, but for now it's quite choppy, not very clear. It could be just a temporary pullback and then we will see a very strong drop, or it can be a very big flat formation. But I'm thinking that we will still sooner or later resume this reversal down from the upper side of the range and eventually hit the lower side of the range. So I'm thinking
it looks like a descending wedge, though. I mean, as a bullish scenario gold here, and it's actually very close to resistance.
Yes.
if you take the bigger, the bigger formation, exactly.
Yes, I'm looking at this wave count on the right. Actually, the silver is the reason why I somehow like this interpretation on the right, because gold is not that clear at the moment, but silver for me is much clearer. Okay, this was a very strong drop, firstly from in March of 2019. Okay, then we have seen a recover, and then very slow drop, but still to a new low, which looks like an ending diagonal for decline. Yes. So if we are now going to recover and retrace all of the ending diagonal, which is normally the case, then obviously gold can see much higher prices. That's why I'm tracking this second wave count. And why I'm talking about this is because obviously this would also be supportive for Aussie as well. Okay. And also another what I have here on my lists. Just a second. I have here also pound Aussie. Okay, pound Aussie. This weekly. Okay, nothing interesting here, but here is a daily chart. Impulsive decline, very slow overlapping recovery contained by these parallel trend lines, and also this can be like an ending diagonal. What I like about the current price action that we spiked to a new high with a gap, reverse down, fill the gap.
Which we talked about that yesterday. This looks like an exhaustive gap up there, so it's not good for the bulls for sure.
And why I'm looking at this to be as a confirmation for bears is, as I said earlier, on the S&P 500. Normally when the gap is filled, okay, when you see a gap higher, price continues higher, and then turns to the downside, fill the gap, then you would expect a bounce. But if this gap does not react as a bounce and send prices to a new high, then but rather moves through it, then this is indication that top is in place. So I'm looking this to be a 5-wave decline, which is clearly evident here, expecting a 3-wave bounce, and then watch out for more weakness. And if you
perhaps we can even get if you go back to the previous chart, we can even get during that rebound a head and shoulders formation forming as a high. If you zoom in, if you zoom in closer to the previous,
to the daily or our chart.
Yeah, there on the hourly chart. If we get a rebound from here.
Okay. Yes, I know what you mean. But this was a little bit small shoulder, but okay, yes.
Yeah, but we can get some kind of a head and shoulders there.
Okay. What I have here is cable against Kiwi. This one is also interesting. Notice this very sharp decline, very deep pullback, but overlapping. We just spiked into 78.6%, which is the last peak level where I want to see that any deep corrections would be finished, either wave 2, wave B, whatever. And we have seen a very nice strong reversal. Okay, and this looks like a key reversal day. So it will be important to where the daily close.
If it closes below yesterday's low, it's going to be a big key reversal on the daily, and that's a really nice signal.
Even if that would not happen, even if we would close above 19,840, I would still be looking as a top formation because I have a 5 waves fall here on the intraday chart. So this again suggests that maybe commodity currencies in general will show strength, and this could this could be the case, especially if stocks would really stabilize.
Add to that, the daily candle that we currently see in Kiwi against the US dollar looks like a spike. We spiked to the 78.6 there as well. Yeah, that spike. Yeah, yes. that spike. So Kiwi, especially if it manages to close positive on the day, that's going to be like a big warning sign for the bears. Big warning sign.
Yes, and also it looks like we completed this 5-wave fall here. We have a 4-hour chart here. Notice this downtrend channel. Actually, it's an Elliott wave channel. We made waves 1, 2, 3, 4, 5, and if we are now going to see higher prices and breaking and maybe even make a daily close above this upper trend line, then I really think that at least 3 waves of recovery will be in the cards. And
I'm with you.
yes, so you should.
What do you think about this pullback to previous support resistance area for the cable at 130? Do you think it's? I mean, I'm tempted to buy it actually, but I'm a little bit skeptical. I don't know. What do you think?
I was long last week. Okay, I hope that this would actually become a wave 3 rather than wave 5 of a smaller degree. But now this, I was aware of this pullback, but what I see on the lower time frame is that actually this current decline is was not so overlapping here. But if we're starting to see a little bit more weakness, then you would not be able to count this as a 5-wave move, because probably wave 3 would be the shortest. Okay, so
yeah, so that means that then we will be within a wave 3, an expanded 3, right?
No. Then I think
why? If we extend lower at this current, Yes,
no, what I'm thinking is that it will extend lower, that actually this wave 2 will become more complex, and that this, if we zoom this back in, and that this could be waves A, B, C, X, A, B, C. This is what then I would be looking at.
So a double zigzag in that case you would be expecting. So you wouldn't be interpreting that move.
I wouldn't be looking for bears, no.
Impulsively. Okay.
No.
Got it. So you're still looking for eventual recovery either from here or from lower?
For wave C or wave 3 higher, because the previous decline was in 3 waves. We've broken out of this downward channel. I'm seeing dollar index moving into resistance. I'm tracking their ending diagonal for a top formation, and on euro dollar for a bottom formation. So if that will plays out, then maybe dollar will weaken, and this could be somehow support for cable. But when it comes to trading, I mean, maybe the short-term intraday chart could be a little bit more clear than on a higher time frame chart, where we are just in the middle of this mess that is actually going on since summer of 2018. So I'm not really sure if that's really worth of a risk at this current situation. I'm thinking that there are probably a lot more better, clearer wave structures on other pairs. And if we consider that on pound Aussie we have 5 waves down, that on pound Kiwi we have 5 waves down, then we really should be asking ourselves if we want to buy cable against the dollar.
Yeah, I get what you say. Tell me something. Do you have any specific views about the GAPI, the pound yen?
Yes. Okay. So on pound yen, I label this as a leading diagonal for wave A or wave 1. Now we are moving down for a 3-wave fall or 3-wave retracement. There's a very interesting support if you extend this February swing low. Okay, and then you have also this wave C to wave A equality level around there. And always when I'm looking for, what is this? Always when I'm looking for, okay. When I'm looking for a pullback in 3 waves, I want to see a retracement for at least 38.2%. So if I try to highlight this a little bit more, and this is still 100 pips away. So I'm thinking that there is more weakness coming, and then maybe a bust in the middle of the month, maybe later in the second half of this month. On the 1-hour chart, still within that wave C, I don't see a completed 5-wave cycle yet. So maybe that was a wave 1, 2, extended wave 3, we will get the wave 4 bounce, and then we see a push down into this box area where I would expect or assume that that downside will be limited.
Okay, perfect. So to recap, you're looking for commodity currencies and likely metals and risk assets to catch a
stabilize.
bid sooner rather than later. At the same time, obviously, which makes sense, you expect that perhaps we are at or almost at resistance here in the treasuries, so you're expecting a move lower. What we didn't say though is, personally, I don't have any real bearish interpretations for the price action in the bunds. So do you also expect another leg lower in the bunds, or you expect this divergence to continue, which might push also, which might be the a reason to push the exchange rate of the Euro USD?
Here we have, it's actually very similar to the 10-year US notes. We have 5 waves up and now expecting a pullback.
Why isn't this after what you've labeled the end of wave 5? And yes, I get it. I agree with you. I do see clearly 5 waves on that move higher. No disagreement, but playing the devil's advocate, why couldn't this be a larger triangle, like a larger wave 4 there? You know what I mean? This whole AB move, because it does it does play out like a triangle very nicely.
Because because if you would be looking for a triangle, you would be expecting limited upside for a wave 5.
Yes, correct.
Okay, but then you should see a very deep 3-wave retracement. So I'm thinking that both 10-year US notes and Bund are already now at resistance. I'm not looking for a breakout on the Bund to the upside if I'm expecting a resistance on the 10-year US notes. So I'm thinking that on both, eventually we will see a next swing to the downside at the same time. And then both will recover. The only difference is what type of corrections will there unfold. I'm tracking on Bund potential flat correction, while on the 10-year US notes could be a zigzag because the prices are lower. We have their lower swing high for a wave B, while here wave B can still be unfolding. But of course, technically speaking, there is a chance that actually Bund is making a triangle. But I would be more confident for a triangle count if I would see the 10-year US notes at the support, but I see it at the resistance.
Yeah, okay. Although local factors can push them to diverge. I mean, if we have something specific, to the Eurozone or whatever. But yes, that is the more likely scenario.
Even if we see break higher here, it still could be a triangle, as you said, and still you would expect limited upside for, in your case, for wave 5, in my case, for a wave B. And it doesn't mean that I or you are wrong. It's all about the price, not how it should be leveled.
Okay.
The price reaction for the next, let's say for the next few days, I think it could be failure at a new high. Either this will be out of a triangle or a wave B as a flat. Yes.
Last but not least, we have a friend here asking, hi Grega, please could you tell us about crude oil?
Yes, sure. Okay.
Let me say here, by the way, I wrote it also on the chat room yesterday. I actually did close 1/3 of my crude short for 5.59% profit. I'm going to be holding the rest, but I do see what you're seeing there on the right-hand chart, the possibility of another leg higher. So, I don't want to, to see that without having booked anything. So you do expect another leg higher and then lower?
I would say that for now, I'm just focused more on another leg higher, and then we'll see what happens. Notice that on the 4-hour chart, we don't have such a clean 5-wave fall. It can easily be also as a wave A, B, and
C. Yeah.
Yes, but
that would imply new highs. Grega, could I ask you something? Would it break the rule? Something I'm looking for it just to take out the buy stops above where you have that 64.72 on wave 4 and then fail, or would that end up making it bullish if it just took that out temporarily?
Well, as you know, even if it's an ABC and you have different wave counts, it's still this ABC can retrace even for 100%, which is well above this 64.70. So it's very hard to tell. For me, the most important in such case won't be a price, but rather the personality of this rise, how it will unfold. If we'll see a very strong drop, like that, this market will tell me this personality looks more like a wave 3 rather than wave C, then probably I would switch to a bullish view. If market will rise still to a new high, but very slowly, much slower compared to the volume or momentum in the first leg, then I would say that probably this is wave C, because momentum is decreasing despite higher prices, and then I would expect a reversal. So 64 for me is do or die zone. Okay, so for this market at the moment, it's easier for me to say that we are going higher, let's say for the next 1-2 days maybe, and then we will see what happens. Then we will have to bring on both wave counts, both possibilities, and then just wait on market.
So 64 is 61.8 back. It was a $6.60 decline. So 61.8 eyeballs, about 64.
Yeah. Exactly.
All right. Okay, buddy. Thank you, man.
Yeah.
Okay.
Welcome.
So that, to be honest, that recovery in crude would also go along very nicely with all the rest of the markets we just looked at. Yeah. So yeah, it plays out from a correlation standpoint very nicely.
You two guys are the best jigsaw puzzle putting together people I know. So, you know, you can always, when Greg comes on, it's not just, and you, Steve, on your reviews, it's not just one instrument at a time. The way you tie them all together is kind of like a tapestry. It may look chaotic when you look behind a tapestry, but after you guys are through, people can see the picture, the whole picture.
Thank you, Coach. Thank you. Gregor is excellent, as
you are
everybody
too.
knows. Thank you. Okay, thank
Blake
you.
Isn't bad. Andre ain't bad. Amanda ain't bad. I could go on. And we have a pretty good guest too coming up here.
Perfect. Thank you very, very much, Gregor. Thank you, Coach. Enjoy the interview.
Thank you, Gregor. It's always great to hear you. You've given me a sharper edge since I've known you. I appreciate it very much.
Thank you. Okay, have a good day.
Okay. All right. All right, I'll see you guys. And Alex, I want to welcome you back to FACE. I'm now making you the presenter. Everyone stick around for Alex. You know he has a lot of fans on Twitter. And there he is. How are you, buddy?
Hi. Thank you for having me again.
Yeah, well, you definitely, you know, were very interesting, and I like to have guests back and kind of get a feel for their flow. So last time we talked, I think the market was in went into a negative mode, and then we had this blow off. So like your Twitter handle says, you know, I believe you concentrate on the DAX. So tell us what's on your radar here, partner.
Yes, I concentrate on the DAX, that's correct. But I want to recap the last webinar when we met the last time in February. I was expecting a fall in DAX, which actually was wrong.
Great transparency.
Based on my time calculations, but it actually worked in the S&P, in the Dow Jones, or in the US market. It was right here.
Yeah.
February 20th.
Yeah.
After 145 days from the all-time high, we had this nice little decline here.
Right.
Which didn't work in DAX. It was here.
Okay.
Okay.
So how do you explain the overperformance of DAX compared to the Dow? Is it currency?
Mostly currency.
Is it Draghi? what do you think it was?
It is currency and the ECB for sure.
Okay. So the weaker euro is what did it.
Yeah.
Gave it the outperformance. So it was kind of like nominal outperformance because it went up because their currency was going down.
Mm-hmm.
Do you ever
Correct.
notice that? Like I remember at the, after the financial crisis, Alex, everything went up together and the dollar went down 30%. And so a lot of the move in the recovery early on, the 30% recovery, most of it was due to the drop in the dollar. Right.
Yeah.
Okay.
Correct.
So if the bears are right about euro, and they're talking targets like, anywhere from 105 to 90, the outperformance of the DAX over US forces should continue. Is that what you're thinking? Or if the dollar turns south, if the euro starts to rally strongly, that would put pressure on the DAX and lift the US.
Yes.
Is that what you're looking for?
Yeah.
Tough call.
Yeah. Mm-hmm.
Okay.
Actually, I was looking for that high from last Friday. Because it was just an open gap, 12,436. I tweeted this on May 1st.
Okay. Okay. So you like to fade gap higher openings?
Yeah.
At times. Okay.
DAX is a gap hunter. It doesn't matter how old those gaps are. DAX is simply a gap hunter. He remembers every gap. Yeah.
They're magnets.
Yeah.
Okay. So where's the next gap to be filled with the DAX up here?
Actually, there are many gaps to the downside now.
Yeah, underneath it. Right.
Old ones. But we have that cash closing gap open from last Friday at 12,412 on the short time. So I'm not sure what happens the next 1 or 2 days. I think the overall trend should be down, but I won't rule it out that levels like 12,350 or even 12,400 are being revisited to close the gaps in cash.
Okay. Can you put your cursor on where you think the gap is here so we could see it?
Here.
Okay. So the gap down there.
Yeah.
Okay. Oh, the gap up there. Oh, okay. So this is what time frame chart here? The 5 minute? Okay.
5 minutes short.
Okay. All right. So you're a seller if it gets up there.
Yeah.
Definitely. I got it. So here it's kind of a neutral call. It could do either. And when you have a market in a neutral position, what do?
Wait.
Okay. Cool. So Tom Petty says waiting is the hardest part.
Yeah.
What do you do while you're waiting, and how do you resist? Let's get into a little bit of trader psychology in your head, because it's very difficult to sit there and do nothing. Yeah. What is your mindset, and what do you tell yourself during those time frames so that you maintain your discipline to do nothing? Do you recall what happened when you forced something or had FOMO, or do you have any expressions that you remind yourself that we're paid to wait? Tell us what's going on in your mind while you sit here and do nothing.
Actually, I'm not sitting here and doing nothing. I will work on my charts.
All right, and not trade. Okay,
yeah,
so
having like 20 espressi in the meantime.
All right, so yeah,
no,
definitely.
Seriously.
Yeah, we're not doing. Even when we're not doing anything, you're right. That's a great point. We are doing something because we're taking in more information and price action, and being patient to wait for something that's so compelling that that you would rather be stopped out and then watch it happen without you, a trade like that, right?
What I have learned in the last years is to completely stick to your system, to your trading system, and as you probably know, and everybody knows it by now, I'm trading with the GAN theory, not 100% GAN, but it's a mixture of many things. Fibonacci GAN, the astrological approach, and the historical approach.
Go ahead.
I suggested to wait for the 12,400 something to go big short, which actually happened on Friday, and we got 400 points on the DAX to the downside in 2 days. So it's very natural to wait now. There is no need to overtrade, probably in the opposite direction, and hope for a bounce, recovery, or whatever.
Okay. So that was a great trade. Yeah, that was a great trade. Okay. Yeah. I mean, it was huge, huge percentage move in a short period of time. Since you do use GAN and fib time ratios and things like that, could you break out your telescope for us, Alex, and tell us what key time windows you're paying attention to going forward this spring into summer?
Yes, I can do that.
I'm doing this just for my, my trading purposes. I'm a selfish host. So you're part of my intelligence gathering.
Thank you. As I told you last time at the webinar,
the eclipse.
there is one very important part in GAN, and that's the astrological approach. What I'm looking here is for time cycles. It's not only the 144 day or 144 trading day time cycle. It's also very important to watch the phenomenons, the celestial phenomenons, planets, the alignment, etc., the oppositions, the conjunctions, and also the eclipses, lunar eclipses or solar eclipses. So to answer your question, the next important date, as far as the next cycle is concerned, will be July 18.
Okay. Is that a solar?
Or... It's a lunar eclipse.
Lunar? Okay.
Call it correctly.
Okay. Okay, so that's right in the middle of summer. It's after summer begins. And with these kind of time projections that you have, and with an eclipse out there, there's no way, is there any way for you to know whether it's going to be a high or a low, whether it inverts? So it's just whatever direction the market is heading into that time frame to be alert for reversals. Is that correct?
Yes, it's a turning point.
Okay.
Yeah.
Okay, I love those.
That's correct. It's not a given thing if it's a high or a low turning point.
Do you pay attention to the Bradley model at all and know what that's based upon? It's pretty popular.
I used to pay attention to that, but actually I'm not using it any longer.
Okay. All right, because I've noticed they can invert. In fact, the last Bradley date was a pretty good low. I know because I was short into it, and that's when we launched from that low. And it's funny, Alex. I'm sitting there thinking, well, yeah, we have a weekly reversal to the downside. Should I go with the Bradley date or the weekly candle? And my discipline said go with the weekly candle, and I would have been better off going with the Bradley date. Anyway, just a quick story from what happened in, I think it was March. Okay, so go ahead.
Visualize that approach. This is DAX futures, and here in January 2018 we had the all-time high, and actually I'm projecting those Gann fans, and I'm having this time cluster here, July 17, July 18, and
maybe a low.
This is the most important line where time and price is in harmony. We actually hit that line on Friday. I was waiting for. So
cool. So is that a tool on MT4 where you can get fan lines on MT4, right?
I don't think so. It's a tool on MT4.
How do you do it? Do you have software for it?
I calculate it
by hand.
Yeah.
Or okay.
Yeah. Yeah.
All right. Interesting.
And then I put it into the chart because I'm a very visual person. Right. I need to see the chart and yeah.
So if we took out that high from last Friday, that would be a very bullish event. Is that your interpretation?
Yes, this is correct.
Okay.
We go above this high. The short theory is not correct.
Okay. All right. And what do you need for any more? Oh, okay. So you're looking to sell a rally to 12.4, and that would be lower than the high. So you'd have a pretty tight risk trade back up there.
Actually, yes. Yeah.
Okay. So is the DAX the main thing that you trade? Do you keep an eye on currency or other bourses, or is DAX really to put the whole jigsaw puzzle together?
Yeah, I trade the DAX. My friends say that I'm married to the DAX. It's my wife. That's correct.
Yeah.
Okay. But yes, for sure, I'm having an eye on the currency, and I'm having, for natural reasons, an eye on the US market. Although the DAX and the Dow don't longer run in tandem as they used to for decades. It's interesting. It's like 2 or 3 years, they're completely decoupled.
Wow.
But
how long did it take you to realize that correlation was dead? Because, you know, I've lost a lot of money when correlations that were my friends quit on me. And it happens, you know, they work till they don't. You know, and it's great if you could recognize it early. Did it take some time to recognize something that was traditional, repeating itself over and over again, that it wasn't working anymore?
I recognized it, but it wasn't that important for me because it would be important if I do the charting on the Dow and trade the DAX, like dirty trading or dirty hedging.
Right.
So no, I realized it like months later when I was doing my charts and analyzing and but this correlation is gone. It's not completely gone, but DAX is doing its own thing by now.
Can I assume if you're looking for you know, a short here in DAX that the euro will continue to decline and the dollar will continue its advance if that scenario plays out?
It can be, but it doesn't have to be.
Okay.
Because it's the same thing with the currency.
That's disconnected too?
It's connected, but they work as long as it works.
Yeah. Okay. All right.
We
So
had times where when DAX and the euro ran completely correlated.
Okay. All right. So another pearl, trade each instrument, even though you know how markets affect each other, like it's its own individual entity.
Yeah,
And you know, because you're not trading the whole board, you're just trading one instrument. So do you have a view on euro?
No.
Okay, understandable.
Actually not. No, I don't trade the euro, so I won't waste my time charting the euro.
Do you chart gold?
No.
All right. What else besides
what is gold? Excuse me. What is gold?
Paper. Gold is a paperweight.
Yeah.
It's that you could put on your desk and be careful not to drop on your foot. But I would say that it has pretty long. I can't get a historical chart on gold that goes back to biblical times. So, but you know, it has been a store of value throughout, with major fluctuations. But I would say that it's something. It's not nothing. You know what that reminded me of, that statement? Back in 2000, people were saying, you know, gold just doesn't work anymore. Okay, that's because it was $200. Okay, it was that people were price sensitive. It's an archaic, barbaric relic. They sure weren't saying that at 1900. Okay, and you know, people are saying now the VIX is broken. It doesn't work anymore. Yeah, so if you're right, and we're going down into declines, and even what we saw in the VIX from, you know, where'd we go from 12 to over 20 in a week or so. So I think it's only broken for people that have been shorting volatility that forgot what they went through last year when they blew up their accounts. But I think gold still works, and I think VIX still works. And anytime people declare an instrument dead, makes me very interested in it.
Yeah, VIX works definitely. You said it. Remember the event where the inverse VIX, the ETF,
it's gone.
Totally disintegrated. They had to close it.
Right. So yeah, be careful with ETFs on VIX products, definitely. Okay, so do you teach what you know? I'm trying to recall. I know you don't have any kind of business model where you're soliciting the public for anything. Is that correct? You're just out there trading your own account and out there on social media to share your ideas. Are there any people that you're interested in following that are part of your intelligence gathering?
There are so many good traders out there.
Okay.
Whew.
Yeah, you need a list, huh?
Question.
Yeah.
I mean, the point is, I'm loving to get inspired by other traders and other Twitter people, but in the last consequence, I'm doing my own thing. It was funny because I was asked today if I could join a meeting of traders in Vienna, and I thought, no, I'm actually not interested in it. I'm doing my own thing, and
Okay. All right. Well, you know, that's another reason, you know, you have no axe to grind, and you know, I think that's interesting. I have a tool shed full of axes and other instruments in there. So, okay. So basically, what's a line of death?
That's the line of death. Actually, it was from the last remarkable high at the end of April. It was the upper falling again line there.
Okay. Okay.
And there was always quite good reaction there. So
go ahead.
In my view, as long as we trade above that line, we can expect some kind of a bounce into the 400 area again, 300, 400 area again, to probably close those open gaps. Because see, this is DAX futures. In futures, we have even a higher open gap at 463. Cash, it's 412. So, yeah.
Okay, let me ask you this. How did you handle the first break below the line of death and then it getting back inside to the upside in the line? So, you know, as a technician, I use wedge lines, and we have these things called throwovers. Is that similar to when we broke that red line? And how do you know it's only going to be a throwover and not acceleration to the downside? You don't know till it isn't, right?
Yeah, correct.
Okay.
Best example was yesterday after hours at the end of the US session. That sequence made me think. And then into the DAX futures close, we had this upward formation, and the volume also was pretty good. So I was thinking in a correct way that probably we could open on or at this line today, in this case. And yes, so it's pretty much undecided now. We'll see.
I have a question from one of our attendees, from Luis Pereira. He goes, I use full moon for possible bearish movement and new moon for possible bullish movement. Could you ask Alex whether he thinks that way? So how do you treat new and full moons?
For me, it doesn't make any difference if it's full moon and new moon. I think the most important fact is that the moon cycle is a natural cycle. So in many times, I won't say most of the times, many times, the moon cycle works. But I wouldn't sign that if new moon is bearish or bullish, or full moon is bearish or bullish.
Okay, so it's kind of like your fan line, your Gann timelines, or cycles.
Like 144 days or eclipses. It's some kind of turning points,
right.
But it doesn't have to be necessarily high or low.
That's a pearl. Okay, so there's no bullish or bearish interpretation, Louise,
no.
But they could end up being highs or lows. If you see a pattern that gives you a bias, good for you. Okay, he uses it more as time analysis, correct? Okay, correct. Okay, Alex, anything you want to wrap it up with before I thank you for being here?
There's so much to say, but I see we ran out of time again.
No, we can hang out if you want.
Actually, what is important for me are the next 24 hours in trading. It might be the case that this week ends in red for the DAX, which would, for me, a continuation of this downtrend. But one has to really watch that gap zone here. This is very much important. But one has to accept if we break below today in 1 or 2 or 3 hours, this gap doesn't have to be closed. Yeah. Okay. So go with the trend and don't go against the trend. That's what.
And can you give me that eclipse date again in July?
July 18.
Okay, partner. All right, everybody. Everyone thank Alex, my trading warrior brother, Dax Warrior, for his time today. And Alex, you want to show your Twitter feed on screen so people know how to, at the minimum, follow Alex on Twitter? There you go. There he is, and it's at XETRA. Yeah. See, to me, I get confused with extra and zextra. So there's Alex in his last movie called "Will the Dax Be My Friend?" And that's it. That was a pilot episode he shot. So Alex, I hope that Dax pips rain down on you, and really appreciate you being here and sharing your hard work. You know,
I enjoyed it very much.
Yeah, you're very a hardworking technician, and
Yes.
your work has value, and never forget it. And for sure, I won't, my trading warrior brother. Thank you so much for being here today on Face and edifying our community.
Thank you. You're welcome.
All right, everyone. That's Alex. So we'll see everyone tomorrow. I have Jamie Satley with us, and again, remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thanks again, Alex.
Thank you. Bye-bye.